All right. Today's SPY was up 0.19%, and yet again, price action is still closing above all of the moving averages, and we're still holding this breakout above 455. So it does look like SPY is still trying to get to that target up there at 460. Remember, last time we got close to that target, we had rejection, and we did get that bearish engulfing candle. But now we have two inside days within that bearish engulfing candle, and it looks like we're trying to break out and head to that higher price. So with this strong bull trend, it's a lot easier to follow the trend, and right now the trend is still bullish while SPY is above 455, and if we break 455, I still have that critical support down there at 452. SPY above 452 or 55 is how you manage risk in this bull trend, expecting higher prices with the next obvious target right there at 460. So let the price action do all the talking and continue to stay in the direction of the trend, and if we do see the trend rolling over, we're going to see it in the price action, which is going to require that break of critical support. Also pay attention to the volume because we're still getting relatively decent volume up here, so we're not getting the buyers drying up just yet. Jumping over to the NASDAQ 100 triple Qs, we were up 0.05% today, and I have the arrow on the chart that I drew last week, and I still think this is the highest likelihood chance that we're going to start climbing towards my target up there at 393 while we are in this bull trend with price action above all the moving averages, and I have the critical support down here right around 374. If we break 374, then we can say something else is happening, but until that day comes, we are looking at a bull trend that is likely trying to get to triple Q's levels of 393 with obvious resistance levels on the way there right around 383 and 387. If we break through 387, it should be a quick trip to 393, so pay attention to the price action and instantly get more bullish if we get that breakout. On the Dow Jones, we were up 0.31% today with another bullish candle, price action above all the moving averages, and we still have the bull trend, and above 353, we're looking for that price target up there right around 360. If we break 353, then we're likely coming down towards the gap fill at 350, but that is also going to be critical support at the rising 20 daily moving average. So stay bullish above 353 for the price target up there at 360. On the Russell 2000 IWM ETF, we were up 1.16% today, and we are getting the breakthrough of that price target at 198, and the next upside target is right around 201. Now, I talked about the small caps many times on weekend analysis on why they were bullish, and we're just now starting to get the weekly breakout. So this could start running, and we could go even higher than the 200s and even push towards the 220s. Stay bullish above the breakout at 198 or the breakout down here at 197, and you can also use support levels at 194 and 193. On the ARKK ETF, we were up 2.04% today, and this is looking like we did get the bear market retest of the breakout into the retest at the rising 20 daily moving average, and all we had to do was hold this support zone right around 46, and so far you can clearly see it looks like we're doing that. Now we do have a gap to fill down here at 49.4, and we can also still find support at the rising moving averages, but if we get the breakout above 50.7, it's going to look like another bull breakout, and then it means we're likely heading to 52 next. So stay bullish above 46 or the breakout right around 48.3. On the VIX, we were up 2.1%, and the VIX is still trading below 15. It's still in a bear trend. So while the VIX is consolidating around 13, there's always going to be the chance we're building up complacency and getting ready to see the VIX spike. But you're going to see that with the VIX spiking above 15, so you're much better off to just stay objective and wait for the breakout. On Bitcoin, we're currently trading right around 29,000, and we're still holding down below the breakdown, which was the old support at 29,500, which is now acting as resistance. So the longer we fail to break through that resistance, the more likely we're having to come down here towards the support at 28,000. However, we're instantly more bullish if we start to see high volume buying and break that resistance at 31,000. On Tesla stock, we were up 0.37% today, and Tesla is still bearish below 274, and I'm instantly bullish if we break above 274 because we have that gap to fill above 289. So I suggest waiting to get bullish until we can break that resistance at 274, and you can get more bearish if we start to get rejected here right around 268, because then we're coming back down towards support at 255 or the rising 50 EMA right around 249. If we break all of that support, look for the gap fill at 235. On Apple stock, we were up 0.32%, and we closed near the high of the day with another 52-week closing high, and we still have the bull trend, and it looks like we're heading back up towards that price target at 197.5, and then above that, we're looking for the nice whole round number of 200. Stay bullish above 194, and if we break below 194, we're likely filling the gap just above 191. So jumping back over to the S&P 500, pay attention to this critical support zone at 452 and 455, and remember, we are still in a bull trend. It's a lot easier to wait for price action to roll over and break support and then get more bearish rather than trying to call a top in a bull trend. There's still many people trying to call tops and people calling for crashes, and they're going to continue to be wrong. And eventually when they are right, it's just going to be luck because they've been wrong all year long. So follow the chart, ignore all of the noise and all of the bias, and let the chart do all the talking. If you want to come crush this market, consider joining Bank Trade Alerts or the Stocks Channel Discord server. You can find out how to join either service by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.